Yeah, no, basically what I was going to look into here is the S wave that we started the day with. It's like a giant S wave, an S. Pretty straightforward. It's one of the most common patterns. It'll happen in all time frames, and debatably it's happening on at all times. Like I can find it almost on every time frame happening at some point. And in this case, this one's fully completed. But I always like to check how much we've pulled back into the move. Like here, you can see it almost pulled back 61% of the way. I like to keep tabs on, seeing how much it's pulled back into the last trend. Like this one right here, when it pulled down, it actually managed to pull back through that 61, which is interesting to monitor because, we're going to see a lot more of these 61s throughout the day. And if they're going to be used in a particular way or if they're going to be failing, then I want to know. But another thing is as well, when we can see that we've started a movement off of this low from the major dump yesterday, the major dump was there, and then we made this low. When we made the low, we can apply a trend from the very, very bottom because we know that this is the uptrend. Until we break it, will be the trend basically. And I like to make sure that that's visible. Other trends like it will be coming through on the screen, but I turn them down when we're not using them anymore. And we know that that uptrend is intact until we break it, and we have a lot of space until we get to it as well. So like it makes me think, how much can we fit before we have to break it? Like I know if we did nothing, it would be able to chill here for all this time. And at 9:30, there should be some pretty erratic movement because, like I was saying, a lot of people um, let's say they're working, they probably wouldn't be able to respond to the 800 point dump. A lot of people will be trying to do something about it this morning. So I think, when the open happens, there could be a lot of people waiting to take action on positions that, they've taken throughout last week that could have been affected. And of course, we have to look out for M's and W's in play as well. We just saw that of 261 from that very, very bottom right there with absolute precision got us up to the B point. Patterns that will work like M's returning back to this right here. And W's also that will do that as well. But when we're in an uptrend that's running really hard or dumping really hard, sometimes it's not as fair about making M's and W's. Maybe it'll just make one and play that out, and there won't be another M or W in sight for a long time. So if we're in a sideways area, they're a lot more predominant to make M's and W's. Like if I see here, it's kind of going sideways. It made this as a W and then turned around and had that as an M. And that kind of movement is really, really common. See that a lot more. Like for instance, it continues. Like technically it made a W here, turned into an M there, and continued that pattern of making W's into M's. It's an interesting place to have the open because in a couple minutes, basically, we're going to get the open. It can be pretty volatile due to the fact that the ATR yesterday was through the roof. It's actually quite strange to see it down to 6 already and up so significantly. I know it might look funny, but the way that it's running up is suggestive of this level and this level due to the fact that we've been running up on W's that kind of have the B point lodged into the downwards move. Like you can see it here too, sort of like a W. You can see it here too, like a W. And maybe we'll get something that's sort of similar here. But I know in this trend, there's been a lot of B points, like this W all the way down here. It's never actually ended up coming back down to its B point. So that level is still untested. I like to mark that just to make sure that, if we ever run into it again, it's not, or we get close to it, it's not a surprise. Same thing goes with this one. We never ended up getting back to it. So I like to make sure that that's marked. Because in the event that we find ourselves breaking the big bad trend at some point throughout the day, what are some appropriate levels that we could fall back to? They're definitely something that could be of a consideration. It all depends on the volatility. But when you have a position and let's say you get away with a short trade later in the day and it ends up dumping really far, those are levels that can become potential targets if they line up with other levels. Another thing we could do is apply a trend from the bottom. The way that we're starting the day is almost like it's in a triangle. We like to make even moves out of both sides of the triangle. We can see that little B point that was in there in the short term just got hit. So that's removed now because just like a normal W, it played out back down to the B point. Now these patterns that are here, they're a little bit different because they're W's that haven't actually reversed off of levels that usually work. They've actually failed to get back to the B point off of any level that they've ever made. It doesn't mean that on the levels that usually work, there's not going to be some sort of profit there, but it didn't manage to get all the way back down to the B points, leaving them untested. So that's why they're in there like that. Of course, this is the open. This kind of movement that we like to do back to triangles is going to become really apparent that whenever we leave a triangle, we love to come back to it. Most of the time, we like to make movements even around the triangle too. This is the open, so the ATR usually likes to take a jump as well. This is the average size of the candles. So if they're 13 points for every single bar that we get, we know, that's a relatively average size candle. Like yesterday we were getting 50 points a candle, which means that there's significantly more risk. If I took a 61 from the very, very bottom to the very, very top of this, or we're associated with the 61, maybe testing it from the underside. The middle of a triangle is never an area that I think is the best to make a new entry, but you can see that when we get outside of the triangle, it's really, really needy to come back to the triangle. And like I was mentioning before, sometimes we like to make the same movement outside of the triangle on either side, which can actually look like an S wave. And the need to come back to test the triangle from the underside, typically pretty high. So we can put some ordinary fibs in here like it's an M. See if we're getting close to the 188-200. This little B point in here is very, very close. And I mean, is it almost the same distance out of the top that it made the bottom? I would say getting there, but not quite yet. At the end of the day. So any trades that are taken, want to make sure that you're absolutely safe, dragging stops into profit, and taking off any kind of profit that you can at the beginning of the movement, just to make sure that it's safe to hold whatever else you have. And it's typical that they make it difficult. So you can see it's really attempted at trying to make things even on both sides of the stupid triangle, and it's come back and tried to make that sort of like S wave on both sides, basically. It's not quite made it all the way back to the triangle, but I do have to put a B point up in here because it's as though it is an M. It's very, very like crappy though. Like it has an M structure though to it. I couldn't argue with that. So in the event that it wants to actually get through the triangle to get back to the B point is a completely other story. If we get even a little bit into the triangle, maybe that's why, to try and get all the way to that B point. Yeah, the return back to the triangle from an even distance on both sides is the theme of this. Take that into consideration because, I mean, it pays to have that as a guideline to know that what the most common thing in the environment would be, just so you don't stand in the way of it being able to do that, or that if you understand it so clearly, maybe you could be a part of it. Like that's the idea. And it's not like you're not going to see this again. It's only because I've seen it before that it's so clear right now. And of course, if anybody did take it from the same distance on the bottom, this is reaching back to the triangle where it's considered the first profit target back to the, and obviously the green dashed line is where the B point is to that pattern, where we can mark down that not only did it go from the 241, so we've done that today, but we also went from the 127, 141, and might be interested in coming back to that 61, which is something we've been doing. That's another pattern itself, like a movement that's very common, and it's one that we go from the 188 all the way back up to this level here. We also like to use the 261 at the bottom there, but those are levels that really like to get us back to this green dash line, particularly. And then on a side note, these two levels have been really associated with this level. It's a separate pattern altogether. It's still a harmonic pattern because it's working in harmony with Fibonacci's. It's a pattern that works in harmony with Fibonacci's, except it's not anything that's associated with a B point. I can see that we came down and touched a 61 there. It was very, that's the first time today that we've actually seen one work properly, and it propelled it forward to try and get to the other side of that triangle where the B point lives. And it makes me think, I'm like, geez, it looks like we're pulling up to a 61 now too. Like, what about that 61? Like, we're just about to hit a new 61. So basically, we can determine whenever it starts a movement, like this, it started the downtrend here and ended the downtrend here. It means we can click it in here and click it in there and determine that, hey, it came up to that 61 and it didn't care about it very much. Sometimes it likes to come back down and test it from above. It would be pretty appropriate. The closer the 61 is to an area that's like the middle, you know, the easier usually it is to get back to it.